Hi and welcome to the Market Alert for Friday, the 5th of March 2021. So yesterday, before Powell spoke, this was a headline that was put out by Zero Hedge. Will Fed Chair Powell give the markets what it want? Well, if you saw the reaction, you can see that it didn't. Underneath the subhead says, will he or won't he? Well, he didn't. And Powell plunges markets into disorder. Dear Fed Chair, are market conditions still orderly? Because that's been the main theme for the Fed since 2008, to keep the market orderly. But no, it went from being orderly to stocks and bonds are plunging as Powell fails to deliver. No hints at a twist, refuses to speculate on repo issues, no pushback against recent bond volatility, and no mention of the SLR exemption. So yeah, it's not looking good for the Fed. The Fed will need more than words to keep the bubble inflated. The Fed can't taper. It can't let interest rates spike, and words won't be enough to hold interest rates down. The Fed is going to have to take action, and that means more bond buying. They've been doing that for years, trillions of the stuff. And as Jim Grant said, Fed has left us with a bond market that's all but destroyed. And Jim Grant of Grant's Interest Rate Observer recently made an appearance on the Wealth Track with Consuelo Mack to talk financial bubbles of historic proportions. And he should know what he's talking about. He's been in the game for years and years, bond specialist. And speaking of bond yields, Goldman Sachs raises 10-year Treasury yield target to 1.9%. Which is going to be interesting because that takes it over the 1.75. JP Morgan said that the bond market wouldn't function if it does, and 2%, as I've said before, would be absolute catastrophe in the short term. Speaking of bond yields, they're currently up, as you can see. We'll just go to the 5-day, have a look here, and you can see that over the last Wednesday and Thursday that yields have spiked from 1.4 to a high overnight here of 1.58. So heading up to that 1.75 at the moment. Not good for the Fed. So are they going to come out with something else? Who knows? But today's news is even more of an issue because we've got the non-farm payroll today at 1:30, forecast to create 197,000 jobs. This will be a boost to the stock market, and I think Powell may be pinning his hopes on this one first before he has to bring out the big guns. And you can see here February payrolls preview has the surge arrived. It's crunch time, and it will be at 1:30 today. And then finally, the silver market, ignoring years of silver price manipulation, Orwellian CFTC now goes after Reddit apes. And this is really interesting because this without doubt and an absolute fact that they've been manipulating the price. I've spoken about this before, and there's plenty of material on the internet. But it's interesting that the CTFC are going after the Reddit and Wall Street bets when they should be going after the likes of JP Morgan. Really good article that discusses all of this. And of course, this yesterday was hammered to the downside too, which is no surprise because it's going to allow, according to Mike Maloney's latest video that he released, that Goldman Sachs have just announced that they're going long silver. Well, as I've said before, they may have been short for years, but there is no way they're going to miss out on the rise in the silver price. And they're going to screw whoever's on the other side. That's how banks work. They don't care. It's all about making money. So at the moment, they're going to force the price lower, and then they will work on being long and driving prices to the upside. So this is the Dow's reaction to Powell yesterday. Market down heavily. I think it was 600 points at one time. Let me just get a quick indication of the range for yesterday. 933, but I know in the cash it was 600. Finished down 394, I think, in the cash. But for futures market, a range there of 1,000 points yesterday. So what I would be looking at here is for the market, any sort of a rally. These are the fibs to the upside, and on the downside from this low to the all-time high is where I would be drawing in potential areas of support on the downside. And we can see here that we've got a confluence of two fibs on the up and down there. So the market are currently holding at this point. So we'll keep those in there, and we'll have a look at the DAX. And let's switch to the daily chart first. Let's just draw in some fibs from scratch so we know where we all are. And we've got the all-time high at the top here. It wasn't too bad for the DAX compared to the Dow. It's America really that's got the bubble, or the major bubble. They're all in bubbles, but it's different degrees. And the Dow, the S&P, and in particular the Nasdaq are major bubbles. So let's draw a retracement for the DAX off this low to the all-time high that was made on Wednesday. And this will give us some downside targets should the market find some support. Now I can't draw any on the upside because this low may be taken out and then it will need to be redrawn. But again, what you want to look at in the short term is staying above that 20 bar moving average and also the 5 bar moving average as well. And again, you'll be able to do this in a 4-hour chart, for example, if you wanted to draw these fibs in. That's easy enough to do, which I will actually, let me just do that for you. It won't take a second or two to do that, then you'll be able to see precisely where we are with this. Let me just do a bit of maintenance here. Let me just get rid of the pivots, just to clean the chart up a bit, and also get rid of the times so that we've got a cleaner looking chart. And there you can see precisely now, because that 4-hour dip to the downside was made overnight, we can actually use this as part of the fibs. So let's just add in some volume, and then we can draw off these fibs. If you want to make it clearer as well, you can just get rid of some of the support lines there, or just change the size of them. I'm just going to show as psychological lines at the moment, just to make it a bit clearer. So you've got the fibs. So from this high, this is the low that was made overnight that I can't draw on the daily chart, but I can here. So from this high to this low, I can draw this in, but let me just grab the 38 as well. So we'll just add this in on the fibs, which are here. We'll add in 50, 38, apply, file, save. And then from this high to this low, we can see that prices are currently at 38%, but now you've got all of these other upside targets that you can use instead of trying to guesstimate it from the daily chart, which we can't draw off there because it's a live low that we're dealing with at the moment. So these are the upside targets back to that all-time high that you can use for the fibs. I'll just draw that one in, and there we go. So that's all of the fibs there on the upside if you wish to use them. Let's have a quick look at the DAX, see where we are in the bigger picture for today's trading session. So overnight prices trading down to the S1 and recovering from the low until prices got to the 200 MA, where they managed to get through and have continued through this at the moment. So currently sitting on the DP level. I'm a bit later this morning. The futures have opened. You can see prices have tried to move higher and now finding support at the DP. In order to move higher, R1 is the upside, which is about 75 points to the upside, and the low obviously the same, because it's the DP is the middle range or mid-range, and everything else will be equidistant from this. So again, you can see and get a good idea. So at the moment, the market finding a bit of support there from the overnight traders, and the futures market just come in and sold a bit into it, as we can see there. So a bit of weakness around. For me, it's going to be a tough one to call today, and because of the non-farm payrolls that will be released later on. Now let's have a quick look at the implied volatility, which I forgot earlier. So let me just drag these in. Here we can see that we've got an increase yesterday, which you'd expect, from 19.43 to 21.34. The last high we had was down here, which is 21.36, so we're close to this. Like I say, it's going to be dependent upon the non-farm payroll figures today. That's going to determine whether the market rallies or not. We're red all the way through at the moment in the coloured version of the implied volatility there. So red, market in corrective mode. Like I say, really it comes down to this one today, February payrolls. That's going to be the key. And finally, just a quick look at the silver chart as well. And you can see exactly what they're doing. As I said yesterday, they're going to use this to their advantage to slam the prices down. And it's going to, in my opinion, it's $24 where they're going to do this. It allows Goldman and Co. to actually buy back at a cheaper price. And that's what they will do. But that won't happen until we get to towards lunch and when the COMEX opens. That used to be in New York, it's now on the CME. So price is quite stable overnight, but I'm not convinced at this point. But just in case we have got a bottom in place, I'm just going to draw from here. And yesterday's low, again, we do have a smaller low overnight, but given that this is the long-term trade, it's not too concerning about using this. And we've got a long way to get back to. Only 38% is yesterday's high. So yeah, just watch for some climatic action. We haven't got it yet. We've got maybe have the start of it where we're starting to see this. But really you get, if we go back to last year, March of last year before we had started the move, this is what they do. You get this climatic action and then they start to bring the market back. So yeah, there's going to be, for me, that's how it works. There's going to be a shakeout down to 24, which is the 200 MA and the low where they bought before, and then move the price of silver up $6. So that's how I'm seeing that. Okay, that's it for the look at today, what happened yesterday, and what to expect news-wise today as well. So a quick look at yesterday's activity before I conclude. And yesterday morning we see that prices came off the low in the futures market, driving prices up to the 14,000 level. Prices held here for a moment or two and then moved high as prices opened, and then we had selling coming in at the DP level, and you'll see this is very high right at the DP, huge volume. They decided to exit. I did too. Prices moved to the downside there. Retracing, you can see further selling coming into the market. We then had a short, which the market had to take out the low that was made to the left, which it did. Very volatile to begin with. This is the 1 minute chart. Here's the selling that came into the market in the 1 minute. So we did have a signal in this as well, and prices straight down to the 200 MA. 200 MA on very high volume is likely to find support, and that's exactly what happened there. Prices came off the low and then reversed. And it was a bit of a sideways, to be honest with you. Again, we had the market moving back up to the DP level. Just a quick trade there as well, because it was at 78% of the move from here to here, and just failed to get to 89%. And that's what it was like. And this is because the market was waiting for Powell. That's why it was doing what it was doing. They thought they was going to perform some sort of miracle for them at the end of the day, which of course he didn't. Unfortunately, I had an osteopathic appointment at 9 a.m, which is why you won't see the chart updated any further with fibs, but you can see prices moving up off this signal with, again, selling coming into the market here at the BRN and also at the previous selling area. The market then trading sideways, closing back below the 5-bar moving average in a moment, which you can see there, and back below that 14,046 level, back below the DP. And I'm just going to whiz through this. We then had a potential sell signal, but you can see here we've got buying pressure in the market right by the entry, bringing the market back to the upside. So they absorbed the selling there. Another potential long, which wasn't filled. The market just stuck it in the sideways range now, waiting for the news later in the day. So the market lower there down to the scalp, again finding support. You can see it just sitting on the BRN, and then another sell that again you can see how the prices were brought back, how they were brought back here as well to get the market back above that psychological level of 14,000, which will look a distant memory at the moment given the overnight. And in the afternoon, prices sharply to the upside once more, trading up with selling pressure coming into the market, which you can see here, and then running out of steam completely. The Dow starting to move lower, as did this, straight back down to the DP. See how they buy back at the DP and at this level. So again, prices held for a moment, but then were retested. And we're below the 14,000 as well through the DP, and they try to buy back once more at the next level, down 100 points off the high, and then they bring it back to the DP, and the market manages just to recover 50 points before they then start to wait for the Fed coming back to the DP and then just holding there. So yeah, a bit of a V-shaped recovery there for the 2-minute chart. Okay, that will do it for this one. Let's see what the non-farm payroll figures bring at lunchtime. So as ever, thanks for watching. See you in the next one.